Good day, all. Ira Epstein with your agriculture update. This is your weekly review, and it is Friday the 13th, March 2020. Okay, so here we are getting on to 5 in the afternoon, and you know, this is the week that you're having to deal again with more cases of COVID-19 reaching America. In Chicago, I just got word that all the Chicago public schools are now closed until further notice. We know that the Catholic schools did the same today, so that's gone. AMC just cut attendance in movie theaters. I guess they're going to cut it by 50%, so they're trying to keep every other seat, I guess, free from each other. Restaurants, bars, you're seeing it one after the other. The president came out with an emergency declaration today that caused a sharp rally in the stock market at the end of the day, but it's a bear market rally in my opinion, not the beginning of anything more. And for those of us that are in the grain markets, watch out, because they've been under tremendous pressure, but the real pressure and the real problem has been in the meat markets, where you went limit down again in a number of them. This has been a week where prices have just been pulled out from under the market. Energy prices up a little bit by the end of the day. And by the way, they were sharply higher than this. Remember, these settlements come in before the end because the president said he's buying some oil for the strategic reserves. And remember, he's not selling the oil he was supposed to. Okay, is that going to change the real demand of the market? And how much oil is he buying? Where's he getting the money from? There'll be a lot of talk about that as to why he's doing it. I don't know that that flew real well. I mean, right now, we've got more problems than oil. When you look at soybeans, I've been warning that this market had been fighting a battle right here at that 18-week average of closes. Now, this is a monthly chart, by the way, so the 18-month moving average. Last week, the market had a reasonable hold-on period here, but this week you lost back about 4.5% in the market, and you're breaking down on the chart. Now, here's the good news. There's good and there's bad always. The market is only mid-month. This is the 13th. We've got a ways to go in this to know where it finishes, but the weekly charts, they're not good. And they're not good because I have pointed out to you on a regular basis that you've got to keep your eye right here. If you start breaking through that, there's a problem in the chart, and you broke through it. So now until you come back through last week's high in that 908 area, you've got a trend that has got lower highs, lower lows. You also now have the possibility where that 18-week average in red is going to get under the 100-week. That'd be another bearish scenario for the market. The good scenario is the market went back down to the lower Bollinger Band, 846 3/4, and held it. The bad is it finished the week at the lows, okay, but at least it's there. You only get out of these bands, be it a weekly chart or a daily, 5% of the time. That does not mean it has to bounce away. It can ride that band lower. I see the bears in full control at this point. And on the weekly charts, I don't look if you're overbought or oversold. I just look at momentum. It's down. Trend down, bias down. The market hit, again, the Bollinger Band. On rallies, I'm waiting for the pros to still be in that market selling. And let me bring something to mind here. If you were to get over this 901 area, let's call it, well, that would change the look of the chart. So you've got to get up nearly 60 some odd cents or so. That's a lot. In the meal market, you're caught in all this sideways action of the Bollinger Band. The weekly chart is not trending. You got a lower low and a higher high, and momentum has gone flat on you. Just sideways action. Soy oil is still very much in the bear camp with lower lows, lower highs. And this is that scenario I don't want to see the beans get in, where it just starts riding. So it hits the lower Bollinger Band, bounces away from it, and then goes back to it. That's what you don't want to see happen if you're a farmer out there. But the market's still under tremendous pressure. And think of the date where, you know, farmers are going to be thinking now about planting soon. I know you're going to go, what? Yeah, for beans it's a little later, not that much, but corn planting, now they're going to get fields ready here. And in the corn market, on the weekly chart, you're just going sideways. You have that lower low, you snapped back, you're fighting the battle at the 18 and the 100-day average, and it's not a trend. You're just whipping back and forth, and you've been doing that literally since the beginning of the year, since December. In the wheat market, the trend resolved to the downside. You have lower highs, lower lows. Now, first support is the 100-week moving average right here in green. Next is the lower Bollinger Band, and again, momentum's down. So trend down, bias down, first support hit, could go to the second. What would negate the downtrend? We have to get over last week's high, and last week's high was 534.5. Would that be able to start an uptrend? No, because you've already got the lower and low in place. Even if you shot straight up, it wouldn't do that. In the sugar market, you know, sometimes those seasonals tell you a story. At the end of February, they said we'd be pointing down if they were correct. I certainly did not see this size decline happen in the market. You were down 10% this week. You were down last week 9%. I mean, just look at the percentages here. This market has lost 35, 40% in no time at all. It's at the lower band in the 100-day average. No, I think the pros are coming out down there and momentum down, but not in a trend. You got the higher high, lower low. We see the bias down. We're not blind. We see that was taken out, but you haven't had that pattern of lower highs, lower lows. This is what you call a massive washout, where they just caught people. In the coffee market, be a bit nervous here. This market's fighting a battle at the 18-day average, unable to stay above it. And as I've been telling you, my canary in the mine is coffee. As cities close down and people don't go out, we saw in China what happened with prices when they weren't buying. Now they're going back out again and making up that demand. Most of China's really getting back to normal. We're not. Europe isn't. They've closed everything in Italy. You can go to a pharmacy or a drugstore. That's it. Well, what's going to happen here? I mean, I just heard as I started this broadcast that all Chicago schools are now closed. That's it. I don't know when they're going to reopen. The trading floor today at 4 o'clock, it's closed. Now, I realize they're keeping the New York Stock Exchange floor open. We'll see. You get one case down there, and then all of a sudden the pressure builds. And I'm talking of COVID-19. You have to go to the electronics. We're all fine with the electronics. That is not the issue. In fact, that's how most people trade today. But who's taking care of these kids? That becomes an issue. And what about the lost income for the family that has to stay home and take care of them? Cotton, big down. It's an export market. You need China to come back into the market. India's got problems with COVID-19. Be careful. These export markets are all getting hit. Look at the meat market. I mean, what a decline. This is a market that's gone from the 127 level down to 95 right now, and the hog market breaking down. It had a couple of chances to be good. We're just not getting the export business yet. Lower highs, lower lows, still very much of a downtrend. I wake up in the mornings at 4:30, and I read like a madman, and by 5:40 in the morning, got my coffee, I start recording for you 40 different charts. I review them. So my idea there is my subscribers start like they're sitting next to me, and I'm going through what I know so far. So I've got the morning fundamentals. I've read everything that I can in Asia, Europe, bringing you up to date with what's going on. If there's reports out that day, I'm going to be talking about them, be it the crush, whatever it is, cattle on feed, anything. Then I start reviewing the charts with points of entry and exit, profit objectives, and always stops. Risk is everything. You've got to control the risk, because when you're trading futures, you're not looking for it to be an investment. It's a trade. Remember that. Then what I'm trying to do is give you that little bit of what I'm seeing, and maybe you had your own idea and it gives you the confidence on the trade. I cover the markets in this exact sequence. When I do so, if you're on our website, there's a scroll bar to pick it up and you can see everything. And if you're not near your computer, we give you a free mobile app that'll work on an iPhone, any of the systems, Android, so you get a push notification, not a text. No charge there. It tells you the video's ready. Just hit the message and it plays for you. And of course, you've got our quote machine there. You've got our news coming in all day. What's the cost of this? $7.95. That's your first 30 days. It gives you a taste. Do you like it? After that, it's $15 for every 30 days, or you can go to a 1-year subscription. How do you get all this? Just call my staff during the week or go to our website under the word research. It gives you all the info and you get it right then and there. And by the way, I've put my charting course with this at a special price for video paid subscribers. I'm Ira Epstein. You have a good day.